Vetri Subramaniam, Head of Equity Funds with Religare Invesco AMC, joins us live with his market take. Vetri, fantastic to have you back and thank you for joining us. Vetri, what do you make of the current market rally? Do you think we have a bend in the road and we are making of a new high, or fundamentally there is very little justification to the kind of price action we've recently seen and reported?
Yeah, good to be here, Nikunj. Well, I mean, I think the market's already made a new high, hasn't it? So I think that's slightly academic. But the point to keep in mind is that, making a new price high in nominal terms is not really all that significant, considering that it's taken us more than 5 years to get back to that point. So there isn't really much for investors to get excited about in that sense. I think there is perhaps reflective of the mood that most investors are currently experiencing right now. But the more relevant issue, rather than the market hitting a new high in nominal terms, is that from a valuation perspective, this market was trading below average valuations for a large part of the last 18 to 24 months, and for the first time now we've gone back to sort of close to average valuations. I think really if the market is to push much higher from here, the baton now passes from re-rating of PE multiples to earnings growth, but at this point of time the visibility of a significant pickup in earnings growth is really not present. So I think it's going to be a lot more heavy lifting for the market from here, and there's still a very challenging period for the economy and also for politics over the next 6 to 12 months.
Vetri, in the near term though, do you think the currency could be playing spoil sport again? Because we've been seeing some weakness trickling in the last couple of trading sessions, and that corresponds with the market facing some fatigue at the higher levels.
Yeah, actually the Indian currency has been a little bit of an oasis of calm over the last few weeks. In fact, if you look over the last week to 10 days, most of the other current account deficit economies, whether it is Brazil, Indonesia, Turkey, South Africa, have all seen their currencies actually slide quite significantly over this period. I think in India, to the extent that through the various borrowing programs that the RBI has been supporting, and also due to the fact that the oil demand has been removed from the market, there's been actually far more stability in our currency as compared to the other current account deficit economies. So in a sense, we are actually playing catch up in terms of losing some ground, just as these other countries have. I also think some of the economic data that's come out of the US has certainly surprised people. It hasn't shown the kind of weakness they were expecting, and in general US yields have also been trending higher. So at this point of time, there is certainly pressure coming through on all emerging market currencies, particularly those with the current account deficit, and I don't think it's going to be any different in India.
Vetri, just a word on the RBI's final guidelines for subsidiarization of foreign banks as well, and what it may do to some of the smaller private sector banks.
I haven't really looked at that in detail, but I think if I were to just sum it up, clearly the RBI is saying that they want to see foreign banks operate through wholly owned subsidiaries. I think given the kind of events that we saw in some geographies during the global financial crisis, where depositors in a particular country were left high and dry because they were dealing with a branch of a foreign bank rather than with the locally incorporated subsidy, means that really from the point of view of protecting our depositors and the point of view of protecting our financial system, this is a very important change that we are bringing about, and I think that's really the more crucial agenda as far as the RBI is concerned. Certainly some of these banks, if they were to convert into wholly owned subsidiaries as the RBI wants them to, will look at the opportunity of making some acquisitions if the rules for that are simplified, but I think we'll have to wait and watch and see how it actually plays out.
As a group, how are you approaching PSU banks now? Yes, in the short term, the NPA concerns and credit growth concerns are not over, but surely Q2 numbers have been much above what Street was betting on.
Yeah, I think as far as our asset management positions in PSU banks is concerned, we don't really look at it so much from a perspective of PSU versus private in that sense. What we are really looking for when we look at any bank is two things. One is the quality of the liability franchise in terms of what kind of low cost deposits they actually have, which is able to help them to a tight liquidity situation. And the second thing that we look at is the visibility and the quantum of non-performing loans that they actually have. I think on that front, the problem that we have with a lot of the banks, and particularly this is more visible among the PSU banks, is that they have such large portfolios of non-performing assets and restructured loans that it has become almost impossible to get any visibility on what the underlying trends are and to what extent they might eventually have to record non-performing assets from this restructured book. So really from that point of view, we are not so enamored of that basket of companies where restructured loans are a very, very large portion of the loan book, be it private or be it public. Secondly, when we actually crunch the valuations and look at what kind of valuations are available in some of the private sector banks as well, with much better liability franchise, much better customer franchise, brand value, we find that the valuation gap after adjusting for restructured loans is not all that significant. So from that point of view, it's not really something which is top of the mind for us in terms of trying to play a PSU bank theme. It's more stock specific, and right now I must admit very few of the PSU banks are making that cut.
Vetri, do you think IT stocks could do well even if rupee stays in a range of, let's say, 62 to 62? I mean, earlier IT stocks, or for the quarter gone by, IT stocks did well because of the correlation trade. But now, independently of the rupee, do you think IT companies have enough business visibility?
I think you've got to look at it in the context of what's happened to the Indian rupee over the last 2 to 2.5 years. There's been a significant depreciation in the value of the rupee, and I think this is something which comes to the benefit of all companies in India which are credible exporters and who have built their business model in terms of being global suppliers of manufactured goods as well as services. Now our Indian IT companies operate at a very significant scale in terms of their global size. And what this currency depreciation really does is that it gives them a lever. It gives them a lever in terms of reinvesting some of that currency benefit to gain a higher market share of the products and services that they are selling, or they could use it to buffer up their margins. So that's really the call that these individual companies have to take. And when I look around in the stock market and look at companies which have levers which they can currently use to their advantage to boost growth and profitability, then all exporters tend to benefit from this at this point of time. So I think in general that's a theme where I think there are still some legs. Right now all these companies are experiencing is the benefit of that higher rupee realization that they are getting, but eventually they will put this to work either in terms of beefing up their business, making investments in their business, or in terms of trying to go for higher market share. So I think in general exporters will do well, and our IT companies are best of breed globally, so there's no reason to believe that they will also not benefit from this.
Vetri, how would you approach the auto space, and in particular names like Bajaj Auto at a time when rest of the auto majors have come out with good monthly sales data? You've only got Bajaj Auto wherein the volumes have slipped this month.
Yeah, I don't want to discuss individual stocks, but I think in general, if you look at it, except for maybe some of the two-wheeler numbers and I think on tractors, frankly, the rest of the auto pack numbers, whether it be cars, whether it be trucks or LCVs, all of that has been disappointing, and in a sense, therefore, it continues to indicate that domestic demand at this point is extremely weak. So we do own some companies in the automobile space where we think valuations are reasonable. They've got fairly strong balance sheets, and over the long term we think these are excellent ways to play the Indian consumer story given their current valuations, which are very depressed as compared to say companies in the consumer staple space where valuations are actually trading at record premiums to historical averages. So we like some of these companies in the auto space for the long term, but in the near term we're not really particularly optimistic about volume growth because we're not really picking up those kind of signals from the ground. But where valuations are reasonable, we're happy to be invested.
Power was another pocket which was really energized in trade yesterday. Vetri, what seems to be aiding or fueling the rally in power stocks, and do you like that sector?
Well, the power sector has actually been tied up in all kinds of, red tape, and I think these have all been well documented. I'm not sure what the source of excitement in power was specifically yesterday, but I think 2-3 trends, are certainly sort of improving in the power sector. One is that, we had this whole DISCOM restructuring. Process is not complete as usual in India. It's taking much longer than it should be to implement a good idea, but at least, the process is underway over there. We're starting to see some kind of movement in terms of trying to address the issues related to coal supply to a lot of the IPPs, and there is talk of maybe some kind of a limited gas pooling to help the gas-based power plants. So I think the main thing in power right now is more that there is some sort of policy environment which policy issues which are starting to get addressed, but our ownership in the utility space is limited largely to, I think in this case, more the public sector utility companies, where we think, they've got the benefit of strong balance sheets, they've got the benefit of strong operating cash flows, and actually very interestingly, power is a fantastic example where we've actually seen so much demand destruction in the real economy in the last year or so, that actually power plants are now backing down on production because they're suddenly finding that there is no demand. So you're actually finding the demand for things like inverters collapsing, the demand for generators, the companies are telling us, is down dramatically. And when you look at some of the power companies, they're now telling us that their plant availability factor, which means their ability to generate, has gone to an all-time high, whereas their load factor, which is the utilization, is still struggling at much lower levels. So we seem to have achieved what we wanted to do many years ago, which is actually get to a situation where we are saying there is, theoretically a little bit of a power surplus. So it's a bit of an unfortunate situation, but I think some of these, large government companies are, companies that we own in our portfolio, and we are still positive on them.
What about telecom, especially with what the Telecom Commission yesterday had to say about the M&A guidelines as well as spectrum pricing? Would that now make you bullish on the sector?
Well, telecom policy in India is the longest running soap opera I have come across. I don't know how many committees and how many times they have tried to continuously rework the whole approach towards pricing, towards mergers and acquisitions. I've been hearing about M&A in the telecom sector for 4 or 5 years now, and it just seems that nothing ever gets done. So I think this is a soap opera with some more acts to follow. Let's, kind of wait and watch in terms of what's happening. I think the crucial thing which has changed in telecom is just two things. One is that there has been, to some extent, a lot of the new companies that came in have faded away. So indirectly there has been consolidation with only few major players left in the market, and secondly they are trying to reduce the gap between their stated pricing and the real revenues that they are realizing by doing away with discounts and trying to gradually take up pricing, which is exactly what you would expect in an industry which is consolidating. So I think those are the benefits which are driving the telecom stocks at this point. As far as policy is concerned, I hope that given this current environment, eventually the policy decisions will be favorable. But as I said, this is a long-running soap opera, and we'll just have to be patient.